Hey, welcome back. It's Jason Walter here. In today's video, I'm going to discuss my top 5 concerns I have about the current real estate market in the United States. So we're going to talk about housing inventory, home prices, interest rates, and much, much more. So stay tuned. And if you're new here, welcome. I post videos about how this pandemic is affecting our housing market as well as personal finance topics. So I invite you to subscribe to this channel if you haven't done so already, and also hit the like button if you appreciate real estate market updates like this one. My first concern or issue I have about the current real estate market in the United States is the lack of housing inventory. And of course, this is an issue for home buyers right now because there's fewer options available for those houses you want to potentially buy. In contrast, this low inventory is great if you're a home seller because there's fewer competition. So let's talk about current housing inventories in the United States because a lot of these numbers here are quite remarkable. So according to Realtor.com, the US total housing inventory decreased 39% over the past year in September. They also reported that newly listed properties in September also decreased by 13.8% since last year. This, of course, means that in September, there was 39% fewer houses available for sale, which can be very frustrating for home buyers, of course. We're seeing the same trend in Northern California as well. So I ran a report just yesterday, which shows inventory in light green. The dark green there is the number of houses sold. And this is for 9 major counties in Northern California over the last 10 years. And this is by quarter. So on the far right is July to September 2020. So as you can see here, housing inventory is down 55.8% compared to 1 year ago, and it's down a whopping 77.9% compared to 10 years ago. And what I found really interesting was even though inventory was down 77.9% compared to 10 years ago, the number of houses sold is up 21.5% during that same time period. Therefore, we have far less houses available for sale, yet sales are significantly higher. So go figure. This just shows how competitive the real estate market is in Northern California. You can also see this when you compare the previous quarter to the current quarter. So inventory is down 23.6%, yet the number of houses sold is up a staggering 44.7%. With tight housing inventory conditions, it's going to be very challenging for home buyers to find a house this fall season. In contrast, if you're a home seller, you're going to be facing little competition in most markets. Before I discuss my second concern I have about the current real estate market, I want to give you a quick reminder to click on the link below to get your 2 free stocks, with each of those being valued up to $1,600 compliments of WeBull, and that promotion ends October 15th. My second concern or issue I have about the current real estate market is record high home prices that we're seeing, and I'll discuss that here in just a little bit. Also, we're seeing increasing rent prices as well, except of course if you live in New York City or San Francisco, for example. So these high home prices are obviously good if you're a home seller, but not so much if you're looking to buy a house. According to the National Association of Realtors, or NAR, the median home price in the U.S. hit a new record high of $311,000 in August. And this was after July's record-breaking month where the median home price hit $304,000. And by the way, that was the first time that the median home price in the U.S. broke $300,000. Homes in California also reached a new record high. So the median home price broke the $700,000 mark for the first time ever, reaching $706,900 in August. And this was a 14.5% increase from August 2019. This yearly price increase was the highest recorded since March 2014. Obviously, the main contributing factors to these high home prices is the low interest rates and low inventory levels. So home buyers right now are taking advantage of near record low interest rates. And speaking of mortgage interest rates, actually rates dropped last week. So according to Freddie Mac, the average 30-year fixed rate mortgage is only 2.88%. So interest rates have been less than 3% since July, and this has been like a shot of adrenaline into our real estate market. A third concern I have about the real estate market is that houses are selling very quickly right now. So in turn, home buyers also have to move very quickly if they see a house they like online. This, of course, is not true in all markets across the United States. Obviously, some markets are more competitive than others, and I'll discuss that here in just a little bit. In the US, houses listed for sale were only on the market for 22 days on average in August. You compare that to last year, and it took houses about 50% longer to sell because the average days on the market 1 year ago was 31 days. NAR also announced that 69% of the homes sold in August 2020 were on the market for less than a month. And by the way, to clarify, on the market, I mean when the house is listed for sale up until the time when the seller accepts an offer. So the time that house is actually physically available for sale. The common phrase for this is days on the market, or DOM. In regards to this, I found an interesting article on Realtor.com, and they reported that the Miami, Fort Lauderdale, West Palm Beach area had a high median days on the market of 93 days. In contrast, the Washington, D.C. area had a much lower days on the market of only 28 days. In Sacramento County, where I live and work as a real estate agent, our average days on the market is only 18 days right now. So houses are selling very, very quickly. However, what I'm seeing is that when the asking price, or what the price that the seller is asking for their house, if that is a reasonable amount and the pictures look great online and the house also looks great in person, then it's really not uncommon for a house to sell within 1 week. To give you an example, the last buyer I got into contract a couple of weeks ago, that home was only listed for 1 day. The seller received 2 offers before selecting my client's offer. However, if the house is overpriced and the photos are bad online, I mean really bad, then it obviously takes longer to sell a house. A fourth issue I have about our real estate market is more in regards to real estate investors. So if you're a flipper or an investor looking to buy a distressed house, meaning a fixer-upper or a short sale or a foreclosure, then good luck. Due to the foreclosure moratorium that's through the end of January 2021, and the fact that many people in the US have a lot of equity in their houses, then there's not as many foreclosures and short sales right now. In fact, they're very rare. In Sacramento County and the city of West Sacramento, foreclosures and short sales only made up 0.9% of all sales in August this year. In other words, there were only 14 sales of foreclosures and short sales out of a total of 1,560 houses that sold that month. So 99.1% of all sales were just regular sales, with the vast majority of those having equity in their houses. So my point here is that investors typically look for houses they want to buy cheap, fix them up, rent them out, or to sell them as a flip. So the lack of distressed houses right now makes it more challenging for investors to find deals. Obviously, the lack of housing inventory in the US makes it challenging in most markets to find those deals. And when you do find a deal, often there's a lot of competition for those. And just to clarify, I'm not saying there's no deals out there, because obviously there are. But it's just more challenging when you have a lack of distressed properties with those foreclosures and short sales. Especially when you compare that to the Great Recession, because during the Great Recession in the Sacramento area, about 75% of all of our sales were foreclosures and short sales. So back then, it was a lot easier to find distressed properties. A fifth issue I have about our real estate market right now is that it's more challenging to get approved for a home loan. And I know it's good and bad, so let's discuss. So speaking of the Great Recession, gone are the days of where you can get a ninja loan. And this is a no income, no job, no assets loan. And this is a loan you can basically get without providing any documentation that you actually can afford the loan. So it's a very, very good thing we no longer have these ninja loans. We're also seeing a very low amount of adjustable rate mortgages, or ARMs. So according to the Mortgage Bankers Association, or the MBA, the share of activity is currently at 2.2% of total applications. So it's really good to see that the total share of applications is really low for ARMs. These types of loans can be very risky, and the reason is that you have a fixed interest rate for a very short period of time. It can be 5, 7, or 10 years, for example. During that time, your rate is the same, and so is your payment. However, after this initial period, your interest rate becomes variable, meaning when interest rates fluctuate, so does your payment. Obviously, these loans are very bad during times when interest rates are rising, because then the homeowner's payment also rises. The downside of more strict underwriting standards for a mortgage loan is that only the more qualified people get approved for a loan, so that limits your buyer pool. However, the obvious upside to more strict underwriting standards is that it supports a more healthy real estate market because only those who are well qualified get a loan. I hope you enjoyed watching this video. If you did, please hit the like button. I greatly appreciate that. And also subscribe to this channel if you haven't done so already. And also don't forget to click on the link below because for a limited time, WeBull is giving away those 2 free stocks, with each of those being valued up to $1,600 each when you deposit at least $100 within 30 days of signing up. So thanks so much for doing that. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.